Hey guys, so have you been thinking about investing in real estate? Now, as a long-term investment, it's always wise because the real estate market as a whole has far surpassed the S&P 500 for years now. Now, if you're looking to start your real estate investment journey, you need to learn certain real estate investment terms first, all right? So real estate investment can be a complex and intimidating world, but as a field of study, knowledge is power. Now, as U.S. businessman Peter Lynch says, know what you own and know why you own it. Now, with the advent of the internet and big data, this sentiment has never been more relevant to real estate investment. Now, over the past 2 decades, these technologies have transformed the way investors research and analyze properties. No longer do you need to spend countless hours and resources sifting through the data and analyzing it manually, all right? So with the touch of a keystroke, you can access a wealth of information about real estate investment terms and tips, and it's gonna save you time and, more importantly, money, all right? Whether you are a seasoned investor or just starting out, understanding the key areas of research can help you make more sound financial decisions. All right, so it's important to remember that real estate investment has many nuances, and success in this field is only as good as the numbers you have crunched in the beginning. For example, if you're looking to invest in single-family properties in like California, say, it's essential to focus on home price appreciation potential rather than yield, as prices have increased faster in California than in most states. Now, in contrast, markets in the Midwest tend to offer low appreciation potential, but great yields. All right. The key to making the right investment decision is to understand what kind of returns you're looking for. Now, do you want a steady income stream or a quick increase in property value or a market that straddles both yield and appreciation? Now, answering fundamental questions like these will help you decide which investment measure is right for you and what matters most to you. So in turn, which market is right for you is going to be greatly important to how you invest. But before you can even start evaluating what you want from your investment, you need to understand some of the essential real estate investment terms. All right, so first is cash flow. Now, cash flow is the amount of money going in and out of the business, which in this case is your investment. So it shows how liquid your investment is during a given period and helps you determine if you can pay the expenses associated with owning the property. You can calculate cash flow by subtracting the operating expenses from the gross income. Now, the next is capitalization rate, or a cap rate. The cap rate is a ratio converted into a percentage that shows the relationship between the cost of the property and the income that the property produces after expenses. It's how you calculate the potential percentage return on your investment. So for example, if you invest $1 million and the net operating income is $100,000 annually, then the cap rate on this investment is 10%. Now then you have cash on cash return. Now the cash on cash return is similar calculation to the cap rate, but you divide the annual before tax cash flow by the total cash invested. Now, this calculation takes into account the financing that you may have leveraged to secure the property. Both the cap rate and the cash on cash are essential equations when evaluating the investment properties. All right, so you also have gross yield. Now, the yield refers to how much money your property will produce, and it's calculated by dividing the total annual projected gross income by the total current property price. Now, this calculation does not take into account valuation changes or taxes, but it will give you a good benchmark for how your property will perform. Then you have depreciation and appreciation. Now, examining how the property's value has increased or decreased is imperative to the investment process, all right? So, however, you should never look at valuation in a vacuum without other data points. Now, basing an investment decision on potential appreciation is speculative in nature and carries with it a higher amount of risk than investing in place income. All right. I'm sure that this information is going to be helpful for you in selecting your next real estate investments. So no one has a secret formula for successful investing in the real estate market, but brushing up on your financial literacy and delving deep into local market dynamics and understanding property-specific fees such as taxes and insurance can give you an edge in the real estate game. Now, today's investors have unprecedented access to technology and data. Now, this information can be key to your success. So I suggest you study hard and do your research so that you are well informed. Now, my name again is Rock Daniels. Hit that subscribe button so you can stay more informed by watching some of my real estate videos and become a better